Welcome back to FX Chart Analysis, your daily source for Forex market news and analysis. Here's what's moving the markets right now. 3:42 p.m. The Canadian dollar is holding near a one-month high as the dollar-loonie pair slides below the critical 1.4100 level. The market is now squarely focused on Wednesday's Bank of Canada decision, where rates are widely expected to remain at 2.25% for a sixth straight meeting. However, analysts at Societe Generale note that Canada's economic resilience, with a rebound in April and improving labor market conditions, keeps the door open for a potential rate hike before year-end. External forces are playing a major role here. Higher oil prices due to renewed tensions in the Middle East are providing a natural buffer for the oil-sensitive loonie. At the same time, lingering trade concerns around the USMCA agreement are capping any structural upside. On the technical side, the dollar-loonie pair has broken below its previous range boundary, near 1.4130, with the next downside target around the 50-day moving average, near 1.3970. The banks are projecting a tight trading range with a mild downward bias, targeting the 1.39702 to 1.4000 support corridor. ING cautions that a permanent break below the psychologically significant 1.4000 level will require clear dovish signals from the Federal Reserve. For now, the pair remains supported by a resilient US dollar and trade headwinds, even as strong oil prices and a hawkish-leaning BoC keep the Canadian dollar structurally supported. That's today's market update. Follow FX Chart Analysis for daily Forex insights, and we'll see you in the next one.